Welcome back to Stock Tickers. We're diving into Liatos Q3 2024 earnings call today. And, well, the tone is, it's a little bit somber today as we take a look at this. On the surface, things look pretty good. They had record revenue, 42.9 billion RMB. That's $6.1 billion US dollars.
Oh, wow.
A 23.6% jump year over year. They hit a massive milestone, too.
Yeah.
1 million cumulative vehicle deliveries in just 58 months.
Okay.
That's a new speed record for emerging Chinese.
Yeah.
New energy vehicle brands.
It's a remarkable achievement, a sign of operational efficiency, strong consumer appeal, no question about it.
But here's the thing that has us scratching our heads and frankly feeling a bit uneasy.
Okay.
Liatos stock took a nosedive on the day of the call, down 13.58%, closing at $25.01 per share. So the question we need to unpack for you is why the disconnect? What has investors spooked amidst what appears to be a very successful quarter?
Yeah, the answer, as is often the case in these situations, is nuanced. A few factors are contributing to this investor concern. First, you have to look at the competitive landscape. The extended range electric vehicle, EREV, space, where Liato has reigned supreme, is getting crowded. New entrants are emerging, putting pressure on Liato's dominance.
Yeah, and it seems they're not taking this challenge lying down. The CEO mentioned giving regional sales teams more autonomy, letting them tailor strategies to local market conditions. It sounds like they're trying to be more agile and responsive in the face of this heightened competition.
It's a recognition that a one-size-fits-all approach isn't going to cut it anymore. They need to get granular, strategic, almost surgical in their approach. The second factor is Liato's ambitious push into the battery electric vehicle, the BEV market. While their EREV L-Series continues to sell well, the company sees BEVs as the future, particularly in that 300,000 plus RMB segment.
So they're seeing a gap in the market for high-value BEVs, and they believe they can leverage their brand reputation and focus on family-oriented features to fill it. It's a bold move, considering how crowded the BEV market already is, with established players like Tesla and a whole host of aggressive domestic competitors.
Exactly. They're entering a very challenging space. That's why Liato is making a big deal about building out their supercharging network. They're aiming to actually surpass Tesla's charging station count in key cities. The goal is to alleviate range anxiety, a major concern for BEV buyers, and offer a seamless charging experience.
Those targets are pretty ambitious. Over 2,000 charging stations by the time their first BEVs launch, and over 4,000 by the end of 2025.
It's a massive undertaking, no doubt, but it sends a strong message to investors and the market at large. They're serious about BEVs and willing to invest heavily to make it work.
Now, charging infrastructure is one piece of the puzzle. The other, and this is where things get really interesting, is autonomous driving technology. Liato is pouring resources into developing their own full-stack, end-to-end AI-powered autonomous driving system.
They're betting big on AI as a key differentiator. The CEO claims their system has seen a 2.5x increase in average mileage per intervention in just 3 months.
Wow.
They're also collecting vast amounts of real-world training data to constantly refine their algorithms.
It seems like we're witnessing a data arms race in the autonomous driving space.
Absolutely. And Liato is right in the thick of it. They believe their focus on data-driven development will allow them to pull ahead of the pack. The CEO even stated his belief that the gap in autonomous driving capabilities between companies will widen, not narrow, in the coming years.
So they're not just playing catch-up, they're aiming to set the pace. But circling back to the elephant in the room, that stock drop, are investors simply not convinced that Liato can successfully navigate this transition to BEVs while fending off fierce competition?
It's difficult to say for certain. The market can be fickle, influenced by a myriad of factors. There's definitely some healthy skepticism about whether Liato can replicate their ERV success in the BEV arena.
And what about their continued emphasis on family users? Can that strategy sustain them in the long run, especially as the Chinese EV market is evolving so rapidly?
That's another crucial question. Their commitment to large SUVs for families might offer stability in the short term, but will it be enough to thrive in a market known for its dynamism and ever-changing consumer preferences? It remains to be seen. Host. It will be interesting to see how the market reacts to Liato's upcoming BEV models and their strategy for tackling that segment.
Speaking of those models, did the call offer any hints about pricing or launch dates? Anything that could give us a better sense of their BEV roadmap?
Unfortunately, the CEO kept those cards close to the vest. He cited the need for confidentiality in the automotive industry, especially when it comes to new product launches.
Sure.
He did, however, reiterate their ambition to be a major player in the high-end BEV market.
So the classic stay tuned situation. But reading between the lines, it seems safe to assume they're not planning to shy away from premium pricing.
That's a fair assumption. They've cultivated a brand that's synonymous with quality and premium features. It would be a surprise if they deviated from that with their BEVs. The question is, can they convince consumers to pay a premium for a Liato BEV when established luxury options are already available?
Brand loyalty only goes so far, especially in a market as cutthroat as China's. They'll need to deliver something truly exceptional to stand out from the crowd.
And if we are to believe the CEO, that's precisely what they intend to do. He's placing a huge bet on AI as the game changer, the key to unlocking a whole new level of user experience. This applies to both autonomous driving and the smart cockpit experience. He even went so far as to say that the Liatos series is still in its youth stage, and that the real leap forward will come from advancements in AI.
They're clearly all in on AI, but it's a bet that many other companies are making as well. What makes Liato's approach different or potentially better?
One point they stressed is their unwavering commitment to real-world data collection. They've already accumulated a staggering 2.6 billion kilometers of real-world training mileage for their autonomous driving system. Think about that, 2.6 billion kilometers.
Wow.
NOA mileage, that's their navigation on autopilot system, has reached an impressive 1.39 billion kilometers. This data, they argue, is a crucial differentiator.
Okay, so they have mountains of data, but it's one thing to have it and another to actually use it effectively.
Yeah.
Did they provide any insights into how they're leveraging this data to improve their AI capabilities?
They did. They pointed to their end-to-end vision language model, or VLM, as a core component of their autonomous driving solution. This model is trained on these massive data sets, allowing it to develop a sophisticated understanding of the traffic environment. And here's the key. They highlighted the speed of their development cycle. The model is updated 2 to 3 times per week.
So it's a constant learning loop. They're gathering data, refining their systems, and pushing out updates at a rapid pace.
Precisely. And they offered some metrics to showcase the results of this approach. They've achieved a notable increase in miles per intervention, a key indicator of autonomous driving performance. They even claim their system is now 3 to 5 times safer than a human driver based on miles per accident.
Those are some bold claims, but impressive numbers if they hold up. Of course, safety and performance are critical. But what about the overall user experience? Did they talk about how AI will enhance the driving experience beyond just the technical aspects?
The CEO was a bit light on specifics, but did hint at some intriguing developments in the pipeline, particularly in human-vehicle interaction. They're experimenting with new ways for drivers to interact with their autonomous driving systems, aiming for a truly seamless and intuitive experience.
It seems they're looking beyond basic functionality and striving to create a truly integrated and intelligent driving experience. It'll be fascinating to see what they unveil in the near future.
Now, another noteworthy point from the call was the CEO's response to a question about potential cost reductions. He talked extensively about their efforts to optimize efficiency across their entire value chain, from technology and procurement to manufacturing and logistics.
Cost control is always a hot topic in the automotive industry.
Yeah.
Especially with companies ramping up production and facing mounting competition.
Hmm.
What stood out to you about their approach?
What I found intriguing was their emphasis on using technological innovation as a key driver of cost reduction.
Okay.
For instance, they're working on integrating their range extender system and their electric drive system to create a more streamlined and cost-effective architecture.
So not just incremental improvements, but aiming for fundamental design changes that can lead to substantial cost savings in the long term.
Exactly. They're also focused on building stronger, more collaborative partnerships with their suppliers, aiming for a win-win approach where both parties benefit from increased efficiency and reduced costs. They see this collaborative model as essential to the industry's long-term health.
That's a smart strategy. By working closely with suppliers and investing in technological innovation, they can potentially mitigate some of the cost pressures that are inherent in the EV market.
And that could give them a competitive edge, especially as they move into the higher-end BEV segment where margins are often thinner.
Now, we can't talk about Liato without addressing the elephant in the room, the competition. The transcript mentions new players entering the EREV space, putting pressure on their L-series. How are they responding to this challenge?
The CEO acknowledged the intensifying competition, but remained confident in Liatos' ability to maintain its leadership position. He emphasized the importance of offering products that provide the most value for their target users. He believes Liatos' strength lies in its deep understanding of family needs and its commitment to delivering a superior user experience.
That seems to be their core message. We know families better than anyone else, and our vehicles are designed to meet their unique needs. It's a compelling narrative, but is it enough to fend off rivals who are also vying for a slice of the family car market?
That's the big question. They'll need to constantly innovate and evolve to stay ahead of the curve. They can't afford to rest on their laurels, especially in a market as dynamic as China's.
The CEO seemed particularly bullish on the Li L6, calling it the most popular and well-received automotive product in the entire world since the beginning of 2024. Are they putting all their eggs in the L6 basket?
While the L6 has undoubtedly been a resounding success, they're not relying solely on one model. They're continuing to invest in the entire L series, adding new features and refining the user experience through over-the-air OTA updates. They're also expanding their sales and service network to reach a wider audience, particularly in lower-tier cities.
It seems like they're trying to strike a delicate balance, capitalize on the L6's momentum while ensuring the long-term viability of the entire L series.
Precisely. It's a challenging but crucial balancing act.
One final question before we move on to the bigger picture. What about their overseas expansion plans? Any updates on that front?
The CEO mentioned they're taking a measured approach to international expansion, focusing initially on regions like the Middle East and Central Asia.
Okay.
They've already established service networks in some of these markets and are gradually building their presence.
So they're dipping their toes in the water before diving in headfirst.
Exactly. They're not rushing into anything. They're being strategic, carefully evaluating market opportunities, and building their infrastructure step by step.
It makes sense. They're already facing intense competition in their home market. It's prudent to ensure they have a solid foundation before venturing into unfamiliar territory.
And that seems to be their overarching philosophy.
Right.
Measured growth, strategic investment, and a laser focus on delivering exceptional value to their target audience.
Well, that's a pretty comprehensive overview of Liatos' key 3 performance and their strategic outlook. But before we wrap things up, I have to ask, what's your gut feeling on their prospects? Can they really pull off this high-wire act,
Totally.
dominate the ERE market while making a splash in the increasingly competitive BEV space?
That is the multi-billion-dollar question, isn't it? There are certainly a lot of unknowns. The EV landscape is incredibly dynamic, constantly shifting, and the competition is only going to intensify.
No shortage of potential disruptors waiting in the wings.
Precisely. But here's what I find compelling about Liato. They've shown a remarkable ability to adapt and execute. They've consistently exceeded expectations, both in terms of sales and technological innovation. And they have a clear, well-defined vision for the future, one rooted in a deep understanding of their target customer.
Their focus on families does seem to be a real differentiator. Other companies talk about it,
Yeah,
but Liato has really built their brand around it.
I agree. And it's not just about adding a third row of seats. They're thinking holistically about the family experience.
Right.
Safety, comfort, entertainment, connectivity, considering all angles. They're even using AI to create a more personalized and intuitive driving experience, something that could really resonate with families.
So you're cautiously optimistic.
I'd say that's a fair assessment. There are risks, definitely. But there's also tremendous potential upside. If they can successfully execute their BEV strategy and continue to innovate in critical areas, like autonomous driving, they could become a true powerhouse in the global EV market.
It's a story that's still being written, and it's one we'll be following closely here at Talk Tickers. Any final thoughts for our listeners? Anything they should keep in mind as they watch Liato's journey unfold?
I think the key takeaway here is that the next few years will be absolutely pivotal for Liato. The decisions they make, the products they bring to market, these things will determine their fate. Will they become a global EV leader, or will they succumb to the industry's relentless pace of change? Only time will tell, but it'll be a fascinating story to watch.
Well said. And that, my friends, is the essence of a Talk Tickers deep dive. We've gone beyond the headlines, explored the nuances, and hopefully emerged with a more informed perspective on Liato's performance and their future prospects.
And perhaps more importantly, we've raised some thought-provoking questions. Questions that we hope will encourage you to continue exploring the ever-evolving landscape of the EV industry.
As always, we appreciate you joining us for this deep dive. Until next time, stay informed, stay curious, and keep your eyes on the road ahead.